morning, everyone, and welcome to the new European crossover webinar. It starts today. It's going to be presented by Forex Analytics, and it's going to be every day at this time. It lasts for 1 hour. The European crossover webinar will be covering all the majors, including gold, crude, to a certain extent, the DAX, bonds, bunds, and of course, just a quick overview of SPOOs and the NAS. But we'll cover daily coverage. The show lasts for 1 hour. It'll begin at this time every day. And like I said, we'll hit the highlights on the analysis, the primary focus of the show is towards the short-term trading. Basically, most of the support resistance levels are over the next 24 to maximum 72 hours. The next 24 hours, we look at a daily, and we look at 2-hour charts, and we look at, like I said, a little touch of news. There won't be too much of an emphasis on news at all, but news kind of gives us the flavor for the day. We're coming back from the summer, from the long holiday. We'd seen the dollar had rallied and then started giving up some of those gains, and now we see the dollar index is now reasserting itself, pushing higher. We're going to be coming up close to some resistance, but certainly the pressure's on. And I'm just going to note just 2 quick stories. That's it, just to kind of give us a flavor of where we are today as we come back from holiday. And just want to pop that in real quick. The dollar powers ahead on trade war concerns. So the whole thing is that I don't want to spend too much time on this. We get straight to the analysis. But essentially, that's grabbing the theme again. See, the dollar seems to be the main defensive currency of choice as the trade war concerns have picked up this week. That's causing a problem for emerging markets. The general sentiment is the dollar is not done too badly out of the trade war concerns, with concerns of a U.S. signal and escalation in the trade war conflict. So I don't want to spend too much news, but that's obviously what's pushing the market today. And also shows that with the CFTC data, we're still outstanding. It says outstanding positions holding just off the highest levels since January 2017 on the CFTC data. Moving on, we also saw, if y'all were available, we had Labor Day here in the States, but you saw this gap here, and the sterling, actually cable, and stated here that, let's go right in here quickly, just a real quick touch of the news. Sterling falls as doubts build over the Brexit and Bank of England's Carney. We had some issues over the weekend. It says fell sharply after chief Brexit negotiation Michael Barnier and Boris Johnson criticized Britain's latest proposals, and the thought is, correct or not, that we could really, well, what their state is, could really crash lower. We had some comments also from Esther Reichelt yesterday from Commerzbank stating, hey, this is not priced in. We can still fall a lot further. Whether that's going to be the case or not, we'll find out. But certainly that is a concern, and where we're seeing the pressure come in under the on cable. Also mentioned, let's see, Purchasing Managers Index was expected to show activity at 55 for August. There's been some concerns that now maybe the economy is slowing more than what they thought, although data overall for the last couple of months have been pretty stable for that. And lastly, the issues with the Italian bond, that's eased up a bit. But I wanted to look on here, Australian Central Bank on hold as the economy is set to seal 27 years without a recession. One of the things with the RBA, they're looking to hold at these very, very low levels. And we've seen the Aussie dollar continue to stay weak. We know that the different interest rate differentials, the old carry trade certainly isn't what it used to be, as now U.S. rates have overcome and gone past the Aussie. But let's go and move on. And first, Joe, if anyone wants to make any suggestions how to go, but as I mentioned, generally we might touch just a little bit on news, just a couple of quick highlights. Certainly coming back from the Labor Day holiday, everybody's going to be settling themselves in this week to see what's happening. Well, certainly looked like the euro was on set to maybe go up to as far as the 38% on a rally back. We've since succumbed as we got some pressure. Obviously, there's concerns with Italian issues in their budget. but we look like we had a pretty good chance to make a move higher here in the euro. And we actually had a 38% coming up here, 1780. Since then, we've fallen back, and now we see the euro on the back foot. Well, one of the things I was posting into the folks here at ForexAnalytix this morning, right when we were coming into this 1552 level, is right here. You've got our levels here. We're actually looking at a daily, and I advise them that, hey, look, we've got a daily level 1552 confluencing with the 1567, the 38% to tighten up your stops. But looking here, we're certainly going to see the dollar strengthening going into this morning. The euro pairing back, but we have exceeded the 38%, and we're coming in right into this daily level here. One of the things that we do use here, or we'll be using, is what we call the bias chart. Yeah, let's move this out of the way. And this is going to give us, on a very short-term basis, give us our support and resistance for the different currencies. These are the pairs that we'll be looking at. When I make an asterisk here, that's just going to refer to a key daily support or resistance level here. We can adjust these what we follow along with the time that we do have, because we definitely want to make sure that we have enough in-depth analysis. But it's going to be on a daily basis, and the outlook is very short-term oriented. We're going to be covering the euro, cable, Aussie, Kiwi, CAD, Swissy, dollar yen, cash dollar index, gold, 30-year bonds, the bunds, the SPOOs, the NAS, the DAX, and if we have some time, we'll determine whether you have within 1 hour enough time with the crude. We'll probably adjust this chart to see where we go, or the bias chart with the markets that we do cover. But let's get on with it right now, and we'll start with this with the euro. As I mentioned, we're looking here at the daily chart. We saw a nice run up here in the euro, and since then we've seen this market pair back. And my suggestion was, if you're short, which I was telling the folks there, tighten up your stops. We're coming into 38% now. As we come into a Monday, traders are coming back. We're on the back foot. So this, in all likelihood, this market may just have to go in and test itself. So if you're looking for the long side, not long side, but where you look at the risk, is really going to come in right there at this 1520, 1530 area here. Although we've got the 52, as we come into the New York session, anyone that's long, they may want to press them. So what we'll do is we'll go in and move into the 2-hour chart, which is my chart that I like from a little bit longer term basis. We'll get to that quickly. So here's that same 1552 level that was on a daily. But if you look here, right there, you've got this bar here. I'll show you. This closing. What I usually do is I go with my support analysis. I always tell folks is I never go with the high or the low. Unless it's on an economic report where you're scalping or day trading, a report just released, because my thinking is how many people actually sold the high and how many people bought the low. So I go with where there's the most volume, or what I refer to as the most touches. So if they want to press this a little bit further, this is where you've got a grouping here, this high, the closes before the market paired back a little bit, and this support. And that's going to come in right there at 1534. So we're going to go with that for our bias chart support resistance. You can see that coming in right here. And let's pull this back a bit. And to make things a little bit easier, what I usually do is I'll put this little bar here. And there we go. It's a little bit short. Let's see. It's so there's going to be our support for today, 1534. I like the 2-hour chart. Everybody has, there's no right or wrong way to go and look at these markets. You have to find out what your own time frame is and works with you. We have, like in the Forex Analytic Room, we have a lot of great traders that use different time frames, and you have to find out what works for you and what your objectives and what your risk levels are. Some of those, like for me, I like to just scalp and day trade, but obviously for those that hold for a lot longer length, obviously you can take advantage of much bigger moves. So certainly here, like I said, I like this area right here, 1535. If they come into the New York session, they want to test these lows, or those that may be long, put them under pressure. This is going to be a good area. Now, as far as resistance, if we get a little bit of a bounce, probably going to start the week off as they come back on the back foot. Probably not going to see much of a rally, I would think, unless we have some kind of news that changes things. Certainly when I put in the news stories, the big thing is the concerns about this trade war. So my thinking would be any rallies back, anybody that's stuck in a position is going to use those opportunities to want to get out. So when we look up here for the resistance, last up here was 1605. Well, that's going to be about 50 pips away. We're going to go right there. Show you. Right here, coming right across. That's going to be basically 50 pips away. 1607, 1606 and a half, just above this little ridge here. So let's go on in on a very short-term basis. Right, just above that closing high here. And I'm talking about the 2-hour bar closing high. You can get an idea of what we're looking at. Right there, just above there, 1607. Now we take an overall view of what the euro's been doing. For the most part, as I said, we focus on a shorter term basis. Pull this back out. Unless we get sustain a close below this 1552. For right now, we're going to still say it's in a range, okay? Until we garner some more strength or momentum, pushing this lower here. But we'll go with this as keep it in the range for now. They may want to test this a little bit. We may have ultimately changed this to bearish, but depending on your outlook, the way we see things, we'll just move this right to pull this back down. Okay. One of the things I like to do is if you see this, I like to go and put in or look for ranges here. Kind of makes it more visually easier for me to pick up on something. That's one of the things that we looked at on the way down here. We thought there might be a possibility it could make it down to 1289. Actually made it down to 1302 before we got that bounce here. And I like to go and mark these off because it makes it easier for me just to remember where the levels are or where the market may be targeting. Right now, our support is here. Now, one of the things we use on this bar is we like to look at where is there any key daily close or daily level that we're looking at. So moving on, let's move into the daily chart. Gold's already dropping right now to 1198. Key on the daily right now is right there at 1556. That's going to be pretty important right there for it to hold. It's not huge, but you can see here it comes all the way across here. So here's going to be a daily support area here, 1556. So we may, and you can see right here, the close is right here, right there, the same thing, 1556, 57, call it 1550, right down now at 1557. So we may go down here and test this, but we may come back up here to capture. So here's the thinking. If we get below 1557, right there for the daily close, it's going to shift this really into more downside momentum to push this even lower. So we'll go with 1557. I'll mark that here. There we go. Now let's go and move in straight into the cable, and we'll figure out how much time we have left so that we can do enough ample analysis on all the different pairs that we're looking at. So we go and take a look here at the cable on the daily. Certainly we just talked about that. That's why I referenced that story. We're actually coming into some support here at 28.21. We actually visited that just a little while ago this morning, earlier in the session, and we're pressing back in here again, right here, this 28.21. Let's go and take a look at this on a 2-hour chart. Now we'll take a look at the on the Fibonacci to get an idea if we can focus on a target. We do have the 61% coming up at 28.07. Now I will tell you that with cable, those that have traded cable for a while know that the cable really likes the 78%. We may get a pause at 28.07, but boy, it likes the 78%. We'll have to see if the pressure remains. So when we're looking at support, we've got 28.07 coming in. Also, now 28.21 we have some support, but you can see right here if they want to press them, all these little touches coming here right there on the 2-hour chart. That comes in at 28.09. So that 28.09 is going to confluence with the 61%. We may be able to get a little bit of support in that area here. So for the day, that's what we're going to be looking at right here. It's 2-hour chart. One thing I like about the 2-hour chart is that you're going to get, you're looking at a 4-hour chart, you're going to get 6 bars for the day, 24-hour day. With a 2-hour chart, you get, obviously going to get double that. And I think you're able to go and pick up areas a little bit quicker. So you can see here that you're able to determine here that the market held pretty well close into this area here, this 28.09. And you got 28.07. So a target the market would shoot for, an area where you'd be looking for shorts to go in and at least cover partially. So we're going to go with that for our support for today, 28.09. Obviously, like I said, we're starting these currencies, these majors on the back foot, and probably not likely to pressure to ease until we get into the New York session. Looking as far as resistance, let's pull this back out. Well, you can see this touch coming across here. That's going to be right there at 28.47, right there, 28.47. And I'll pull this back so you can get a little better look. You can see that coming across here with support and just basically a battlefield right here. This 28.47 as the market went backwards and forwards until it was able to break up and then and you see here they came back to 28.47 for support and then finally started rallying back here. Well, we'll give it some room here. So the resistance would actually be this little level right here, that ridge. That's 28.62.5. We'll call it 28.63. Let's move this down here. That's going to be our resistance. Pretty tight resistance considering it's under pressure for today. And for support, it's going to be 28.09 right there. So 28.63 and 28.09. Got that here. Let's mark this off at 28.63. Certainly bearish. Let's go and take a look at where we stand here on a daily. Do we see any key areas to go and defend? Well, here's that 28.21. That's going to be key for the daily. It needs to go and hold that, or it opens the downside, opens the door for further downside momentum. So it's important today to defend 28.21. So we're going to mark this off here on the support here. So when you're looking at the bias chart, you know, okay, well, the support 28.09, but they need to get past that 28.21. So if you're playing it from the long side, you know, you're going to know that it's important that they get beyond this 28.21 on the close. If not, or if you're short, you know that as long as we get a close below 28.21, the market is going to continue to push for that downside momentum. So let's look it up on the upside. We saw the 28.63. Right now, the market is really under some pressure. It would have to get, at this point, looking at it, it would have to get above 29.12 just to stop the bleeding. That would be my thinking. Is that now we're Obviously, we're just leaning on it very hard. We've got the momentum going for those that are short. It wouldn't turn it bullish until we got above. We'd have to get beyond this area to get this back on a short-term bullish mode. So my thinking is right here, this whole 29.12, even a little bit higher, 29.31, just to stop the bleeding. And then that would, anyone that was short say, okay, I need to go and let up on some of these shorts. Let's see what this market is made of. Until we can get above 29.12, and actually a little bit higher than that, actually, would be 29.31. That's what it would take to stop the bleeding. So we'll actually go and mark it. So you have a marker to go by to think, okay, well, wow, it's got a long ways to go before we'd have to be able to turn this thing around. So your key close would be 29.31 right there. So this market is going to stay bearish. It's going to be key for it to grab 28.21 on a daily close. If not, it's just further downside momentum. And resistance is at 28.63. It needs 29.31 just to stop the bleeding for right now. Technically speaking, we're going to go and move into the Aussie, and boy, time is clipping along. Hang on. Just one moment. Now let's go move into the Aussie, and boy, we are clipping along for time right now. So the Aussies continue to remain under pressure. We do know that we have the central bank meeting coming up. Market's pretty well overdone here. It is very, very overdone. When I'm looking here for downside, I'm not sure where it's going to go or how far. I mean, we've even seen some other traders talk about, hey, look, it's really oversold. You can see here on this 2-hour, very oversold market, but how much further can it push? The thinking is that the central bank is not going to take any action. One of the things that came out, and we'd like to look at the news, was that the market was doing pretty good, hold up here, and then Westpac, one of the major banks, raised the rates, and immediately the thinking was the RBA is going to have to keep things on hold to or maintain a stimulative type policy to keep the economy going. So then the market really took a whack, and then of course with the Chinese. We didn't get anything that came out of that delegation that came to the United States, and then further rhetoric from the administration really got things moving to the downside. Well, we've taken out the stops here, and the news on the central bank is pretty much, old hat. So I'm going to actually tighten things up. Well, actually, I'll tell you what, we'll just put the right here at the lows. We're going to say that's going to be support. Most of the news is about as bad as it can get. We've got 71.58, so we'll just put 71.50 for the day's low or for the support. Certainly this is bearish. I don't think there's any case to be made why anyone would want to get long, but you may want to go in and tighten your stops. I'll move this down here. Yeah, I'm hoping we don't run out of time. Resistance is going to be right coming in there, right there. Just above those highs, you can see the touches coming across right here. That's going to be 72.41. That'll be resistance coming right across 72.41. Let's go and move into the Kiwi. And the poor Kiwi's taking quite the bath too. Same thing here, no real big change. I mean, the pressures continue to remain lower here. The Kiwi for a little bit was holding up a little bit better than the Aussie, but it has succumbed too because once again, the concerns with the trade war. We're just going to go and put our lows, our support just below these lows. But once again, like I said, Obviously, the pressure is lower here. We're going to go with 65.40. I tell you what, we're going to just go with the 65.25 for them to test it. But once again, the pressure remains to the downside. It's just a matter of how far can they push it. Certainly, a target they'd be looking at probably 65 before they get there to 65.25. So we're actually going to go and use this here with 65.25. And on the upside, where would they encounter resistance? It's going to be right there. You can see this coming across. Well, actually, you can see this is a very key area here. You can see it now, a little bounce back snap, but this is resistance, where resistance comes in right there, which is going to be 66.35. Let's go and move into the dollar CAD, because the dollar CAD is coming into a very key area, and I want to try and get as much analysis done as possible. Obviously, still bearish. Let's move into the dollar CAD. Dollar CAD is very interesting here, and it had quite the reaction here. Let's go and take a look here quickly on a daily. We had a good reaction. If you were with us at the ForexAnalytix room, one of the things that we'd focus on was this 38%. It actually came up just a hair bit short of that 38%, but it came in right into this zone of support here. And we've seen a great reaction off of that. Right here, I believe Amanda is long dollar CAD. We came in, I jumped out way much earlier. We thought that, didn't like the way the market was reacting at the time, but boy, it has since clipped on and added on here. And we're coming into an area here of some resistance here. You can see here, now this is on a daily, this is key, 31.52. On daily, actually, a little bit, 31.52. So let's mark this off. That's going to be key for this market to sustain above, or where you would expect them to find some resistance, 31.52. And let's go and move on to the 2-hour chart. This is key. Now we get to some very interesting stuff here. Wow, look at this rally back here. And we've just got past the 50% of this area right here, 33.87. And example we'll show you quickly. A bit of a little hair right there, but you can see we're coming in right there. There's a 50% coming in. We've just got past that 50%, but here's what I'm focusing on. And this is what I like to talk about as far as the touches. So the target that I'm looking at, or key resistance, is right there, 31.66. See all these little closes and touches right here? A lot of volume there. So this is my target that I'm looking for the market to go for. Could we get up in here? Yeah, maybe we can get beyond that, and we'll have to see. Maybe the dollar even garners more momentum. But on a very short-term basis, here's the target we're looking at, 31.66 right here. And you can say it's confluence in here with this 50%, but I like that 31.66 here for resistance today. There we go. You see, and it's gonna. And one of the things you know is that 52 is key on the daily. That's why we have the little asterisk there. So once again, if you're long, you might want to say, wow, you know what? I'll tell you what. If it starts to lose 52 going on, for the daily close, I know that I probably want to tighten up my stops, or maybe I might get out of some of my longs, because it's going to be key for this market to sustain on a closing basis above 31.52. Now let's take a look at what we offer support. Certainly things have turned around here. Let's put this here. I'll put a little bar. It's just above here. If I put it right there, it's going to be a problem. So I just put it just above here. But we know there's our resistance, 31.66. Now where's support? Well, you just go with the technicals right here. You can see here, coming right across here, 30.87. Well, that's what we're going to go with for our support. And I like the 30.87 because it takes out this little low here, So that would be support. So if let's say you ended up getting out a part of your position here, or most of it, whatever the case, whatever your objectives are, and you go, but man, I really believe in the dollar CAD. I think that CAD is going to be in a world of trouble, with all this negotiation stuff. Where do I add? Okay, well, certainly one great area to add would be 38% back from wherever those highs are if we start to see some pullback action. But a good area is going to be here, this 3087. You'll end all the way down from 3087 to right here, 3076. This will be an area where of interest where they were trying to add back onto longs. Now that things are turned around, you can even make the case here on a very short-term basis. Take a look at this. And once again, I like to put my touches not on the very tips. I like to do them across the bodies here. You can see we've already broken above here. You see that? The market is saying, boy, it's blue skies ahead from a technical standpoint. You see that? So this market wants to go. And if you look at it, if this market were to pull back, you would look for the market to go in and reassert longs on a test of this trend line, which would confluence here with the 3087 right in here. So it makes sense that this whole little area be area where they try and buy. Now we've broken. If you think of it this way, if you're short the market, you're thinking, man, you're thinking about that trend line, I got to get out of my shorts. So that's where we've seen this continue move up. So on the pull back, people are trying to go in and add on to longs at that point. So I hope that's helpful there. Once again, we focus really on the short-term trading here. We try and keep a little bit of medium-term perspective, but medium-term for us is basically about 5 days tops. We'll take a look at the dollar Swissy. We really went overdone. One of the things, if you see here, is I like to refer to when I put them in kind of a maroon color, basically like a pivot to me. And we'll take a look here on the dollar Swiss on a daily. Let's get rid of that line here. So to me, when I put in a maroon line, is because I consider that to be a pivot. You can see all the action that was taking place here on this daily. Once we got above that, it was blue skies ahead. We came back down to support, and once we got down to, we're able to break past this pivot, which I consider a pivot line, with bullish above, bearish below. Well, then you can see that they had the horns honking on the submarine, down, down, down she goes. And certainly that was it. Once we got past this, we continued with this upside move, and same thing, we got beyond that, and we're able to defend it. So things are holding here. One of the things that the dollar Swiss has been is it's always been a good early sign of what the dollar wanted to do. Although the dollar Swiss for the last 3 months has been doing its own thing, even when it struggled, the dollar index was still moving higher. So I wouldn't really necessarily use this as I've done before in the past, which is a good signal for dollar, early dollar weakness or dollar strength. But we have come back into that pivot level. We're holding it. We're getting beyond it. So at this point, to me, what that tells me is any pullbacks in the dollar, people are going to be trying to buy it. Because now we've got below this pivot, and now we're getting back above it. So until things materially turn around, people are going to be trying to buy those dips in the dollar. We talked about dollar CAD. Where would you be stepping in? We've got some resistance right now. Key level there, 97.47. That's going to be some resistance. I don't see anything key on the daily right now, but we'll take this down to the 2 hour to see where that would line up. And there's that 97.47 on a very short-term basis. Let's take a look where we would stand here on a fib. Well, the 23% comes in at 97.51, and we just about made it there. And that confluences with 97.47, but I think you have to give it a little bit more room. And the reason why is, to me, we're coming to a Monday, we're coming back for the long summer holiday. They may want to push this dollar for all it's worth. So we're going to go with this area, 97.75. Might be a little bit of a stretch, and we may not even see that today, but that's an area that I think on a short-term basis, or any moves towards 97.75. But we're going to give it some extra room here. It's going to be 97.75, certainly bearish. And we're looking at, as far as support, well, that's going to be just above our pivot, which is 97.04. So my thinking is that anybody who is short is thinking, well, God, I'm going to try and cover, and there's a pivot, and I think they would try and cover before that. And that'll be right there. And we'll pull this out, focus in a little bit closer. You can see these closes right here. Right there. So our support would actually come in right there, 97.10. That's going to be support. Pullbacks to this area, most likely, would be defended. So we're going to give it a little bit of room here, 97.10. Certainly getting above that 66, they did that on the daily. That was key on the way down. It's key on the way, so we'll go with 97.10. Let's get into the dollar yen. One of the things with the dollar yen is key is on the daily. Now we got above this 1136. We talked about this last week, or actually leading into that, and we got that daily close and we quickly lost it. Key for the dollar yen, got to get a daily close above 1136 to get this upside momentum going higher. 66 is that big pivot, but to me, it's all about the daily close of 1136. We'll take a look at it on the 2-hour. Let's go and mark this off though, because we know that that's key. We actually even had it there, 1136 for our resistance. We're actually 1125 right now. You can see where they ran into. Right, you see this touch is coming across right there? See how that right there at 43.5, call 44. Market got just a little bit above that. We're going to use that for our resistance. That touches right there. You can see it. So it's going to be 1144 for resistance, which is below what they ran up to today. And we know it's key for this market to get above 36 on daily close. We need to get above that and save of this to turn this to bullish. When we look here on the daily, support's going to come in right there across these little touches and just above the low of this little closing bar right there. That's 1087. 1087 right there. Pretty tight range. But certainly, like I said, this is key for this market, have it in purple. It needs to give, and the reason it was so long, because I wanted to show you, focus in, you can see all the touches and how key that is on a daily for this to get above it. And you can see here, when they got above it, they try to make a move of it. Now, this is on a 2-hour because it quickly got above and quickly lost it. But once again, like I said, it's key for them. You can see the struggles they've had trying to hold that 36. They need to recapture that 36. So it's going to be 1087 on daily support. Now let's go and jump into the cash dollar index. Trying to get all the analysis in. This was a key area that we were looking at last week, which is 94.48. And that was my intermediate target, 94.48. I had an open target for 94.02. And certainly the dollar looked under pressure, but as you move into August, we know that liquidity is a lot thinner. Although I don't think it was as thin this year because of all the trade talk and all that stuff going on. And with China and then with NAFTA and the whole works. Couple of issues I guess we'll take a look at. Another thing is by the euro, we'll talk about, so is under pressure. But our medium-term target was 94.48. It's defended, and we're coming into this, and we're looking at the daily. 95.50 is key. 95.50. But let's get back in here to the daily. Not the daily, but the 2 hour. This has been a key area for this market to get above, which is 95.28. That's at key daily close. So let's move this back here. Actually, on the breakdown, they actually used that as resistance before. So you can see right here, see how they almost just to this 95.20, but 95.20 is key on a daily close if they can recapture it. Once again, it flips the momentum back the other way. You can see here, I've got that marked as key, 95.28. So when we're looking at resistance here on the cash dollar index, a 2 hour chart, we can see that 95.71 is a 50%. We'll show that using the fib. You'd expect some market reaction right here. And actually, that's just going to be just above these little highs right here. So I like that 95.71 when you look actually at a level. The way I use word, mine would come in at 95.67. But because it's the 50%, they may want to reach up there and grab it real quick. So we're going to go with 95.71 as our resistance level here on the cash dollar index. Doesn't mean you sell it there, it just means that that's going to be a target that the bulls would like to go for. You may want to lighten up as we make that move towards 95.71. We know it's key for this market to hold above this 28. So you may want to consider, wow, you know what, 71, that's almost 50 pips from that key daily level. Maybe I will lighten up at the 71. That happens to be the 50%. So let's go and take a look at as far as support. Now we know, like I said, the dollar's going. I mean, the market's going to be under pressure. The majors, because right now people might be feeling like they have to come in and start to buy dollars to get ready for this continued move, which we're seeing here. We know that with the CFTC data, that's confirming it. Looks like the dollar is on its way. One of the things that I'm also seeing here with the euro, it's under pressure, is the administration made some comments about the car situation. You know, one of the reasons we got the euro moving higher was when I think Trump made the comments, okay, they're going to give the Eurozone a bit of a pass for a while or something. And now, as of last week, he made some comments about the cars, you know, tariffs on the cars. I don't like the deal, blah, blah, blah. So it's added on to downside momentum. Also, the concerns with the Italian budget. Is that thing going to spin out of control? Just some concerns. Now with the thing with China, what happens is the Eurozone ends up being, trying to think of the right wording, but, you know, they're, I don't call it an innocent bystander, but certainly they get affected if things slow down in China. So once again, it's the glass is half empty type analysis, where everything starts to look bearish. So in all likelihood, we'll probably push lower. We may find some support today, but in all likelihood, it certainly seems like they'll want to be working lower in light of those circumstances. And when you look at the technicals for the dollar going higher and also the data to back it up as far as CFTC positioning, certainly looks like we'll be defending this, just like we referenced here with the dollar CAD. Any pullbacks to the breakout of the trend line, which confluence here with the 3087, meaning you're going to find willing buyers on any pullbacks. So that momentum should continue, although we're into an area where we'll probably see a little bit of a pause. So as we come into New York, they may try and make one more push, but I think people may try and lighten up here. 95.28 is key on the way down. Looking at technicals, we're going to go with 95.16 for our support. You can see that's an important key level right here. So we'll go with 95.16 for support on the cash dollar index. And certainly things are starting to turn around here for the dollar, which looked a little bit bearish last week. And looks like with the news, we've got things working up higher again. Now let's go and move into the gold market. Certainly looked like the gold market was trying to hold its own. It's actually did a pretty good job, actually. One of the things that I like to look at is market profile. And we actually covered this last week with some of the guys, and we focused on this area right here, this 1219 area here. We saw that was a good area from a point of control, and also some good volume there. And it lined up technically, and the market quickly fell off. I was looking for a rotation to 1208. I thought it was going to happen over 36 to 48 hours. Well, I'll be doggone if it didn't get to 1208 within the same trading session after it hung on at 1219. And the market held up very well, trying to push back up to 1215, all the way back up to 1214.15. Now it's rolling back over as the positioning the momentum starts to go and roll over with this reassertion of the dollar. So where do we go from here? And that gave us a little bit of perspective. Well, this 97, you can see that. Looks like we just hit that 97 too. There we go. Good area. Actually, on the way down, it wasn't that great of an area, but you can see now they found some support here at that 97. They may want to go in and test that a little bit lower. Now we're looking on a daily. So when we look on a daily, we know that key support is going to be right there. That's going to be 94. That's going to be our daily support level that we need to keep an eye on if the market starts to come apart. Go here. So our daily level is at 97. Well, I'll be doggone if we didn't get there. Look at that. Looks like we made it 97.30. We'll pull this out a little bit. Well, let's take a look at what we look at where we are on a fib. We're just past the 38%, but look where the 50% comes in. Right there at 94. And that's going to be key for the daily. Certainly we have the momentum going lower. We did come into this 97. So if you were short, that'd be a good target to have gone to, and we're seeing that. But how much further can they go in and push? Well, if this dollar makes an extra nudge, we might start to see a further move. This one's a little bit tougher, I'll be quite honest with you right here. I don't know if the wheels come off the caboose, we can make it down here to 92, but boy, that's a pretty good drenching right there. On a very short-term basis, some additional support at 95. The reason I say that because I think the dollar can go a little bit higher, but at least for right now, today, I don't think it's going to go a whole lot higher. It may make it to that 95.71 we talked about. Well, and we got 93 here. This is the real good support here, is at 92. That's a long ways off. So on a short-term basis, right there, we're going to go to 95. You can see that coming across right here. On a short-term basis, 95. That'll be our intraday support. And we know that it's key for this market to defend 94 on a daily close. On the upside here for gold, it's got to be right there at 1205. That was a very key area on the way back, and a good area where the market found some balance there, some demand. And it also struggled too. And when it lost 90 to 05, it really came apart. So that's actually going to be our resistance there. You could actually even make the case even a little bit lower. Yeah, 1205 or 480. So we're going to go with that. One of the things I want to show you, look at all the time that was spent there, 1205, a little over 1205. But look at that volume. Once we hit the volume right here, look at that. What they call the VPOC. Once we got past 12, yeah, that was it. That's all she wrote. So any rallies back up here, here's 3.5. Any really to the 4, probably really 1204. I'll go with 1204, actually on the resistance. But you can see how this market, look how much trading is going on. Look at that, at 12 for these last 3 days. And now, so when he moves back towards there, the market's going to want to go in and sell. If someone any longs or initiate shorts. So we're going to go with 1204 for the resistance. And this gets flipped back to bearish. Just one moment. Now let's take a look at the, really see how much time we got. Oh God, we're running out of time. Let's go on in. Let's take a look at real quick with the bonds. The bonds are coming. Okay, now you know that I have to use this maroon line. I call it a pivot, and you can see how key that 4407 has been as a pivot. Right here. Once we got past the 4407, there's blue skies ahead. Now we'll come back and look what we found. Lo and behold, look where we find support at. 4407. Actually, the low was 4408. So it's going to be 4407 on a very short-term basis. And we're going to take a look here on the upside. We don't like to go with the touches, and right now it's going to be right there. And I want to get clipping along right there at 4430. Right here, well, actually, yeah, 4430. And he had the support right here. That's what I had just below this bar. So 4430. And let's go move into the blend. I'm trying to hurry and get everything done before the top of the hour. This blend has been all over the place with everything that's going on with Italy and the Italian budget. I have this, usually, I mean, unless I'm real short-term trading, I don't go, I'll drop all the way down. You'll see here, we dropped all the way down to 15 minutes. One of the reasons I have it down to 15 minutes, and I just want to show you here on the 2 hour, this thing is all over the place. I don't mean all over the place, but in the sense that I think you have to really focus on a very short-term time frame when it comes to the buns, because they really move like nobody's business. Resistance, if you're looking at a 2 hour, would be right there, 63, just across this ridge, where they may be able to goose some stops. It's going to be 63.25 right there. We had 24. We'll just move it up 1 pip, or 1 tick, I should say. Support. Right there, coming across 63.04. This thing has moved around so much. This was a tough one right now, I think. But 60 and 6304 seems like it's not a whole long ways down, but you know how this market can really just look at some of these rooms. One of the things about the buns is you definitely don't want to get in the way of these things. They will really take your heads off. But we'll go right there. 6304. 6325. There we go. And let's just go and take a quick look at the SPOOs. We have really held up very, very well in the SPOOs. But, you know, as we get past August, and August has been, over the years, pretty good month for the stock market in general. I'm not sure that momentum may start to dry up a little bit. That being said, looking at it from a straight up technical standpoint, that's support right there. Right here. 28.94.75, we'll just call it 28.94, just a hair lower. And as far as resistance, right here, this bar coming right across that line. There. 29.03. Looking for any moves back here. But I mean, obviously, this thing's been very, very, very bullish. But we'll go with 29.03 for the resistance. We already have that there. Okay. And taking a quick look here at the NAS. Trying to get all this done before the top of the hour. It's going to be right there. Oh, that's a long ways away. That's actually going to be this ridge right here. You can see that. This is where you start to see some demand coming right there. 75.98. Still a ways down there. But we may see some of that pressure start to come in. So 75.98. On the upside for the NAS, right here, 76.56, right there. Let's take a look here with the DAX. We just got past the 78%. Just past it. Obviously, a lot of pressure coming in here with the DAX. This bar here, you see where they close this bar right there? Right there, 12.149. So I think that's your risk on here, 12.149 if you're, let's say, trying to get long, but that's where, I don't want to say the extreme. We already got past the 78%, and here's the level here, will be right here. If the market wants to push it for all she's worth, that'll be it, 12.149. Or if you're looking to play it the other way, you know what your risk level is on that. Upside, things would really have to get turned around here, but it'll be right there. 12, well, you can see we even found the support a little bit there before it bounced, just 12.516, 12.516. Show you where I'm coming up with that, right there. Apologize, I mean 12.216, 12.216. I thought that was crazy. You know, 12.216. And lastly here's crude oil here. Well, we got this big level right here. I brought the days back because I was doing some work on crude. But it's going to be right there at 71.30. Pretty nice move back in the crude. I was doing some work on that. I reduced the day supply on that. Let's just do 85 real quickly. You can see the importance of that right there. And support, which is going to go right there. You know, just right here. You see this little ridge here? Right there. And that's going to be 70, 74. And that takes us to the top of the hour. And here's the bias chart for today from ForexAnalytix. There we go.
Great overview, Paulie. Great overview, Paulie.
Oh, hey, Dale. How you doing?
Good, buddy. Welcome aboard. We're filling out our roster with you for the FX fantasy team. In light of everyone playing NFL fantasy teams,
okay.
we now have an FX trading fantasy team with you on board. All right, so great to have you on board. Always respected your work, and I was listening, and what a great review for people.
No, thank you very much. I mean, I appreciate it. Thank you very much, Dale. And like I said, most of our trading is going to be focused on short term from 24 to tops 72 hours, but most of it, the levels that we have is over the next 24 hours, that same day or into the next session. So really short term trading, I guess they can combine that with the excellent analysis that we get from the other providers too, other guests.
Yeah, great to have someone short term because, you know, that fits a lot of people's personality. A lot of people don't like to hold things overnight. They just want to get it done, call it a day, bank some pips, and move on. So really, we needed you. Glad to have you.
Well, I'm glad to be aboard, and I appreciate the opportunity.
All right, buddy.
Part of the team.